Good evening to all the members who are attending this webinar today. I welcome you on behalf of Madras Tax Bar. Today's session is our 80th webinar of the entire Madras Tax Bar webinar series from the day one from April 11th, which we've been conducting. And today we have Vaitheeswaran sir to take us through our 80th webinar on real estate sector, specifically dealing with RERA and IPC. So I welcome Vaitheeswaran sir, and I welcome all of you to this 80th webinars of ours. The session will be taken by Vaitheeswaran sir, and once he completes with this presentation, we will have the question answer round. We will follow the same usual exercise. If there is any question, you can raise your hands in the app, or you can put in your messages in the chat box, your queries in your chat box. We'll try to take up as many as possible, depending on the availability of time. So I welcome once again everyone to this session today, and I welcome Vaitheeswaran sir once again on behalf of Madras Tax Bar. Vaitheeswaran sir, over to you.
Good evening. Thank you, Prithvi, and good evening to all the friends who are on this webinar. A couple of weeks back only, you called me to speak on your 25th event, and you're now calling me to speak on the 80th event. It's unbelievable that the speed at which seminar webinars are being held. It's a very nice thing that there are still topics available for discussion, and the enthusiasm is still equally strong in terms of trying to use this period where all of us have completely found our normal life turned topsy-turvy, and we are trying to live with the new reality, the new norm. And in that journey, I think for many of the youngsters on the call, they'd probably be gaining much more knowledge than what they would have had in their college days, given the background that we have as far as our college curriculum and systems are concerned. And equally good for seniors because they're able to look at and listen to some of the topics. I've not been able to attend to many of your sessions, but if I have time, I've always looked into the YouTube if there's some interesting topic to look at or listen to. I think I listened to ARLs on CPC pleadings, and of course I did attend Mr. Datta's event. So it's fantastic that MTV is doing this on a daily basis, and keep it going. The 100th is not far away. So with that, let me go straight to my topic. This would be a fairly new topic.
Sir, I'm sorry, Vaitheeswaran sir. Sir, can you adjust your camera a little bit, sir?
I should go back, forward?
Go back, sir. Yes, sir. This is fine, sir. Yes.
Audio is fine?
Audio is fine, sir.
Okay.
Thank you.
Given this topic is quite fairly new to many, but some would already be in this practice. RERA and IBC are to some extent have got some kind of impact on tax, but I'm not going to go into that. I'm going to go into this specific elements of RERA and IBC relevant to the real estate sector. It's a huge impact from a legislative perspective and implementation perspective. In the course of the presentation, I will touch upon a couple of case laws and new interpretation that has flown thanks to this kind of legislation, and how we're looking at and what kind of inference we can draw from these decisions, and see how we can match them and go forward. I also flagged a couple of issues to be addressed and the way forward for the sector post-COVID, and some of the business aspects involving the real estate sector. Let me go straight to the presentation. If you look at the why RERA, that's a fundamental question. In fact, I've always asked this question, and I've also had some discussions with the builders when this legislation was coming in the early days. This was coming for a long time. Maharashtra had a fantastic RERA, and the parliament wanted to enact an all India RERA in the lines of Maharashtra. So in fact, in the earlier rounds, we did take a stand that what is the necessity for having a special legislation for one sector. So the answer from the government was there are a lot of victims of this sector, there are a lot of people who are affected by this sector, there are a lot of people who are duped by this sector, a lot of consumers who are worried in terms of this. So I said that is also the case for many other sectors. It is not as if only real estate has got its share of victims. Every business has got its share of victims, and there could be unscrupulous players, there could be good players. Both are a mixed bag as far as business is concerned. So the Consumer Protection Act was always available for deficiency of service. The Consumer Protection Act was always available for negligence. The competition legislation was equally available for certain unfair trade practices. So why pick up real estate alone? But the government was very clear that this would change the picture, change the image of real estate in India, and this would change the business of real estate in India was their thought process. And to some extent, they are right in the way they've gone about it. So the law was implemented from 1st May 2017, and a kind of a relaxation was made by allowing the states to make the RERA rules. And states have notified the RERA rules, and they've also constituted what is called as a real estate regulatory authority. If you look at the four tests or four objectives of RERA: efficiency and transparency in sale of real estate projects, protecting the interest of consumers in the real estate sector, establishing an adjudication and dispute resolution mechanism, and have an appellate tribunal to hear appeals arising out of RERA. So first question which anybody would ask is, what is covered? Who would walk into RERA, or when would RERA apply? The way they've provided for in terms of the statutory provisions is that all real estate projects, if you do a development of a building or just building with apartments, or you decide to do a layout, you buy sets of lands and then go for a permission, convert them into plots, or build apartments or housing complex, etc., villas, township, multi-story developments, all projects are covered. In other words, the entire gamut of real estate projects are now regulated by RERA. So how does it work? First of all, the moment it is a real estate project, you have to register it with RERA. The promoter has to register the entire project with RERA. So you may ask me, what is the difference? Prior to RERA, what was the scenario? Prior to RERA, what was the scenario was that anybody could advertise anything on the newspaper. They could say that this project is coming up at so-and-so location. It has got the best of water. Even during floods, you will have water. You have all kinds of facilities. The airport is 3 kilometers away. The railway station is 1 kilometer away. All kinds of fancy catch lines would be there. And in many cases, people have found that they could not even locate the property. There were scenarios where one fellow would advertise for one project, collect the money, use it for another project, and things like that. It is not as if every person was in that kind of game, but there were some people who were playing that game. And therefore, the way RERA worked was, you have to register your project with RERA. And without registration, you cannot advertise. You cannot go to the market. You cannot book a single sale. You cannot offer to sell. You cannot invite for purchase. So you had this kind of requirement. And they also stipulated that RERA registration required even for an ongoing project, unless completion certificate has been obtained. In fact, the completion certificate is just not relevant to CC, relevant to our GST. It has gone beyond GST, and it has gone into RERA also. And in some states, in some districts and cities, there is no concept of a completion certificate. In some parts of the country, there is an occupancy certificate in addition to a completion certificate. In Tamil Nadu, we don't have an occupancy certificate, we only have a completion certificate. And in some parts of Tamil Nadu, we don't even have a CC concept, and that is why those exceptions to can issue CC, etc. But the main effect of this is that you cannot do anything unless you're registered. So somebody does development in phases, phase 1, phase 2. Then you have to, each phase is considered as a standalone project, and each one would require registration. And as far as ongoing projects, we already talked about. And what is this registration? It's the most comprehensive database that is going to be provided by a promoter to the RERA authority. So multiple authentic information and data is provided. So for example, if you're talking about some kind of a residential project, and you're talking about it located, let us say, in Kovur, you will have to clearly give your GPS location. You have to say pinpoint with all the geographical indicators as to where the project is, where it is located. Your document related information must be perfect. So every single element pertaining to the project will have to be shared with the authority in the application. The application is a very, very comprehensive application. And that data is very, very critical from a customer perspective. So logically, any professional asks a question, okay, if this is so cumbersome and complex. In fact, I had this chat with a couple of builders long back when 2016, 2017, when the whole thing was going on. Many of the builders were saying that, sir, what is the exception? How can I get out of RERA? As there are only two scenarios. One, your land to be developed does not exceed 500 square meters. Or your apartments proposed to be developed does not exceed 8, including all phases. So some of the builders were coming back and saying that, okay, this is very clear, I will do 7. I will not do 8, or maximum I'll do 8. I will not cross 8. I will try to keep the limit so that I don't have to go to RERA. So I had a long chat with some of them and said that, look, this is not the way you look at it. RERA should not be perceived as a stumbling block. RERA should be perceived as one more element of compliance, and it might help you in terms of transparency as well as customer acceptance. Therefore, if you grow in terms of size, if you need to grow in terms of size, you have to think big. So don't curtail curtail your development capacity to a limit which is artificial so that you don't want to be inside RERA. See what you can do commercially. If you are commercially capable of doing 15 apartments or 35 apartments, please go ahead and do it. And RERA should not act as a stumbling block. And many players have listened in that sense that they have grown in that segment. So RERA would not apply only if the apartments proposed to develop does not exceed 8. And completion certificate has been issued for the project prior to the commencement of the Act, 1st May 2017. Before that, if you had got a CC, then RERA was not required. Of course, there was some kind of drama as to when which CC can be issued. And states brought their own rules, and each of them got their own dilution of rules depending upon which state it was. And in some cases, even before the project was fully complete, if you had some basic construction done and your pillar stage done or your shell done, you could get a CC. And if you could get a CC, then automatically you were out of RERA. And of course, it also had an added advantage. If you get a CC, you're also out of GST. Any renovation, repair, redevelopment, which does not involve in advertising, etc., is of course coming out as an exception. And what does a RERA do? One, they register your project, they regulate the entire project, and they maintain a very comprehensive website which is very clear in terms of data. You will have a huge database of registered players and, most important, defaulters. The biggest advantage of RERA in terms of transparency is that a customer, with a touch of a button, would be in a position to know that what is he walking into. He's heard this nice project, he's got some feelers sent by his friend, he's got a prospectus sent by email, and he's looking at that particular project. And normally, biggest challenge with real estate is that the first thing we look at is title. And not many of you know this facet of my practice. Many of you think would know me as a tax lawyer, but I also do significant title, and this is something which I learned from my father, who was in the civil side of practice. So title is an art in terms of verification of title, and going back deep into, people say go to 12 years. I try to go to 50 years and try to find out title. Title history is a beautiful discovery. You try to find out whether the whole thing, the whole branch of how the property has evolved over various people and transactions happening, and what is the impact of all that. So when a customer looks at the title, he typically goes to a lawyer to get a title opinion. Now a lawyer would give a professional title opinion. Some customers have become so smart that they feel that they go to a bank and take a loan from the bank, and the bank has got a panel of lawyers, and the bank certifies that title is okay. They're happy with that. But I always point out that if something goes wrong with the title, it is the borrower who's still liable. So it is important for the customer to ensure that title is independently verified by himself or his advisors. Now, title part is clear. The second part would be, what about the project? What about the profile of the developer? Will he complete the project? Will he go away halfway? Is there a history of default? So all this data was not available. It was more of market say and our information that you gathered from friends and news, etc. Now you have a database. You have a database of defaulters, you have a database of penal action taken by RERA, and all kinds of information that will be critical for your decision making is now available. So RERA ensures that there is tremendous amount of transparency and information provided to customers. And RERA will ensure that all the obligations cast upon the promoters or the allottees will be fulfilled, and all the regulation directions will also be fulfilled. So now we saw the structure of RERA. Does RERA have teeth enough to take action? Some of you who are seniors in this call would know that would have gone to Delhi. I still remember those earlier days in my old office, where we used to appear for the MRTP Commission in Delhi. And MRTP Commission was very interesting because it was very funny. One fellow would put an advertisement where he would make fun of another person's product by displaying everything about that product, the color of the product, the label of the product, except the name, everything is there. The customer will definitely know that the product under ridicule is so obvious. And then because of that ridicule and because of all those negative points made, this fellow's sales will go up by in a couple of days. Now the other fellow who's a victim will go to MRTP and say this is an unfair trade practice. Now at that time, when MRTP Commission, we used to convince the MRTP Commission that there's a case made out, then the MRTP Commission will pass an order called as cease and desist. That means stop, don't do it again. But in that stop and do it again will take a couple of weeks and couple of months. And by the time the damage will be done, sales would have completely reversed. So MRTP Commission did not have the teeth or did not have the power. And that has been adequately addressed to the Competition Commission. No, Competition Commission has got significant powers. So when they structured the RERA, they also ensured that RERA has enough powers. That is very, very important. If you're talking about a regulatory authority, unless you confer power on the regulatory authority, it doesn't work. So on a complaint or on a suo motu action, it can call upon any promoter or allotee or real estate agent to furnish information or explanation relating to its affairs as authority may require, and appoint one or more person to make an inquiry in relation to affairs of the promoter, allotee, or agent. And apart from that, it has all the powers of the civil code under the CPC. It also has the power to issue interim orders, restrain any promoter or anybody from carrying out any act until concludes such inquiry. But the interesting part is the section says, without giving notice to such party where the authority deems it necessary. Now that could be tested, because natural justice is a concept which has to be ingrained into the statute books. And if it is not ingrained, then it has to be given its due right. And therefore, I have my doubts on this particular section surviving in a challenge, but the provision is there as on date in the legislation. Power is also there to impose penalty, interest in regard to contravention. I'm not going to the details of penalties. Significant penalties are there in the legislation for violation. The whole idea is that if the legislation talks about regulation and transparency, if the regulation talks about things to be done, and the regulation confers upon authority enough power to take action against a person who has not done certain things, and also impose significant penalty, then the regulation will work. Then the powers would actually come into play. And in some cases, they can also refer the matter to the Competition Commission if they so feel so. Now comes the most important part of RERA. Typically, what happened before RERA was that there is this concept of moving the kudu to kudu bayara, project to project, money will move. You will collect money for one project. The project is extremely successful in terms of demand or location, and that money would be immediately used for another project which is struggling for money. And if for some reason that project is stuck or that project is not sold, your money is all blocked there, and then the due dates will happen for this project and you're struggling for cash. Therefore, this legislation says 70% of the amounts realized for a project from allottees to be kept in a separate bank account. It's a dedicated bank account to be opened, and you have to deposit 70% of all money is realized, and you can use it only for the land cost and the construction cost. And if you want to withdraw money from that account to spend for your project, then it has to be in proportion to your percentage of completion. So this is where the GST borrowed certain concepts of percentage of completion in 3/2019 when they made those changes as far as real estate is concerned. So your withdrawal of amount should be in proportion to percentage of consumption, and the withdrawal also requires certification by an engineer, an architect, and CA, and the accounts that we audited from a CA, so that its utilization is well demonstrated and proven. In my view, this one single change made a major impact as far as transparency in business is concerned. This is another important change. Many of us have bought apartments or looked at apartments to purchase at some point of time in our lives, and biggest question is, what is the size of the apartment? They'll say 1,000 square feet. Now, what is 1,000 square feet? Now that was always a dispute. You actually go and live in the apartment, it may be 650 square feet. You never know. So now this legislation says carpet area. You start selling in terms of carpet area, and they define what is a carpet area. Net usable floor area of an apartment, excluding external walls, areas under the service shaft, exclusive balcony or veranda, and exclusive open terrace area. So what it includes is only the internal walls, the wall that separates the kitchen or the dining room, etc. They will all be included in the carpet area, but not the other walls. So which means you now know exactly what is the size of the apartment that you're going to buy. In fact, in future, you may not have advertisements as 2 BHK. You will soon have advertisement as 2.5 BSHK. This is my guess. While the 0.5 could be a small room for a study, because we are now under work from home. And if you see today's newspaper article about how leading FMCG companies have decided that they may not even require the corporate office because many of them are working from home. So that being the case, going forward, everybody living in the house and working from home would require a dedicated space so that they're not disturbed by anybody else in working. And so 2 could become 2.5, where you might have a small study kind of thing with all connectivity and things like that. This is just a guess. Let's see how it works out. Can registration be revoked? Of course, yes. On a complaint or suo motu, or if there is a recommendation to the competent authority, there can be a clear revocation of the registration. And obviously, you have to be in default. You must be defaulting compliance of the Act or rules or regulation, or you violate your approvals. And the most important part, you make all kinds of false representation. You get into about approval, affiliation, nature of services, misleading representation, kind of services. So nowadays, you have seen even the advertisements. Of course, now it's a sluggish market and quite a dead market. But otherwise, you would have seen that people were sticking to what they are offering. Earlier days, you could see advertisements which literally offered everything. But in reality, you may not have those kind of offerings that when you see the project or when you go to the project site. But now people are quite clear. If they advertise something that it has so many amenities, it will have so many amenities. Otherwise, there can be enough consequences through the RERA. And what happens on revocation, the authority shall debar the promoter from accessing website in relation to that project and specify his name in the list of defaulters, display his photo, and also inform RERA in other states and union territories. On the Gulf, Karumbuli Sambuli, and the type, this is unheard of. This legislation is powerful. Luckily, they have not used this in that sense, but it is very powerful. So the authority can say, number one, you can't access the website anymore. Second, you will be identified in the list of defaulters with your photo, and all other state RERA will be informed. Therefore, you cannot escape from one state to do a project in another state. So it is most important that whoever goes for registration RERA or whoever starts a project which falls under RERA understands the scope of the legislation and ensures that timelines are met. He has realistic timelines, and these realistic timelines are met, because if there is a problem, the consequences are completely desired. Then the authority can also facilitate the remaining development to be carried out under Section 8. He can also direct the bank holding the project account to freeze the account and take further action for facilitating remaining development, and issue all other directions that may be necessary in the interest of the public. This I'll explain some examples later. So, two features I said. One is that 70% is an important feature. The second important feature is the fact that carpet area is well defined. The third important feature is that you cannot collect an advance without a written agreement that is registered. That means advance more than 10%. So we're talking about a property of 1 crore and you're collecting more than 10% of that as an advance. Please ensure that you have a written agreement. Otherwise, it is not possible. Those days of simply writing a letter or simply communicating something and getting money is no longer possible. You have to enter into a written agreement. And interestingly, RERA being a parliament legislation has not understood the niceties or the differences in state legislation. I'll give an example. Somewhere in RERA, you will have a section which says that when the project is complete, the promoter shall execute a sale deed for the property in favor of the society of the owners. Now, this is typical Maharashtra. In Maharashtra, when you buy an apartment, you will not get a document in your name. You will get a unit certificate. The document will be registered in favor of the association or the society. If there are 1,000 apartments, there are 1,000 units which are available in terms of certification. So you are a member of that society, you will get that unit, and subsequently you want to sell the apartment, you transfer the unit, the other person becomes a member. Whereas in a state like Tamil Nadu, and to some extent Andhra and Karnataka, we have this twin document concept, whereby there is a sale deed which is executed for sale of undivided share of land, and there is a construction agreement that is executed. In fact, in the earlier days, in the earlier days when an apartment, Alakriti was the first player and Sanmar was a very big player in construction. Those days and all, what used to happen is that the UDS was was registered as a sale deed. There was a construction agreement. At one point of time, the sub-registrar took a stand that when the construction agreement is presented for registration, I want to see the property, I want to see the project site, and I want to increase the value. I mean, when the sale deed was presented for registration, those days construction was not required for registration. When the sale deed for UDS was presented for registration, he wanted to add the value of the apartment and he wanted to visit the site. And there was a circular issued by the IG. That circular was challenged before the Madras High Court. And the Madras High Court, in the case of Park, struck down that circular, and subsequently the High Court judgment was also upheld by the Supreme Court, where the Madras High Court and the Supreme Court concurred with the stand of the developer that the sub-registrar cannot look at anything beyond the document that is presented for registration. So after that, for a long time, UDS was registered separately and construction agreement was not registered. It was always through an unregistered agreement. So if you buy an apartment, you will have two documents, one for UDS and one for construction agreement. Subsequently, Tamil Nadu changed its law, and the construction agreement also required registration at a lower stamp duty. So today you have 11% impact on a UDS, whereas you have only a 4% impact on the construction agreement. So then came the question, if I get a completion certificate, can I still register two documents? After obtaining a CC because I've completed the project, can I still present two documents, one for UDS and one for construction agreement? Latest 1 month ago, the IG issued a circular, by the IG registration issued a circular saying that even after completion of CC, the sub-registrar cannot add the construction value to the sale deed value. Therefore, sale deed for UDS can be registered separately. Construction can be registered separately. Each will attract differential stamp duty based on the value that is involved. Why I'm saying all this is that this very facet of executing two documents is peculiar to certain states, whereas RERA as a legislation mandates some kind of a conveyance to execute in favor of the society. So there are a lot of such aspects in the RERA which is structured from an India perspective, but not all states are the same as far as stamp law is concerned. So that's why I gave this example of saying that now in the agreement that has to be registered, what kind of agreement will you register? Will you register an agreement for sale, or will you register for agreement of construction? So many builders have decided that they would register the agreement for construction instead of separately registering an agreement for sale. Now, what are the challenges which the real estate sector is facing? Number one, liquidity. Whatever is the problem faced by the NBFCs is passed on to the builders. There's a huge impact on the real estate market. And banks are generally hesitant to fund the real estate projects because they're finding it difficult to get back the money. There's a sluggish growth. And there are different solutions available, and all of them are a challenge thanks to COVID. And one method would be to try to settle your loans or to go for consolidation or probably an IPO. All of them are now, and consolidation is probably a still possible item in the agenda, but IPO is probably a very difficult one given the current market. But this is an interesting data which you have to look at to understand what kind of inventory that builders are holding. If you look at Mumbai, MMR is Mumbai, you're talking about unsold stock of 271,000 units in quarter 3, 18-19. And look at quarter 3, 19-20, it's 293,376, a jump by 8%. So nearly 3 lakhs of apartments or units are unsold, completed, and available as inventory in Mumbai. If you take Chennai, you had 76,269 in Q3 18-19, and now it is 76,747 in Q3 19-20. I can't even imagine what it be in Q1 2021 because of the COVID impact. It even more impacted sales. So interesting database is that you have to look at the percentage, whether it is plus or minus, and that gives an indication of the growth in terms of cities. So if you look at some cities, they are showing phenomenal reduction in terms of inventory. There are a lot of sales that is happening. That's also is an indication of how certain cities are getting more and more urbanized than what they were. Look at the money that is locked in. Developers have locked in capital of an estimated 3.7 trillion rupees. If you look at Chennai, you're looking at unsold inventory of 2019 Q4 of 32,217 units. And you look at the value, INR in terms of billion, it is about 2,222 billion. It's a huge amount that is that YTS is years to sell. Years to sell indicates that how much of time will it take for this inventory to be sold. So we look at Chennai with the 32,338 inventory unsold units, it will take 2.5 years on a rough estimate for you to get exhausted. So tell me, how much appetite will a builder have to build fresh new units when this is the time frame that is going to be taken for selling the old inventory? So there is a huge waiting game, and the waiting game is even more compounded by the fact that you are not assured of a rental return. And earlier days, you can invest at 3,000 rupees and you could exit at 4,000 rupees and make some money. Those options are no longer available. And all the utilities and facilities require a maintenance cost. You have to keep on maintaining the property even though you're not getting a tenant, and the maintenance cost is quite high. New projects are all on hold. Land is a still big challenge. And thanks to tax laws, you have even more complications. You have the IT department which says that, okay, you're a developer, you've not sold units, you have inventory. What about notional rent? Why don't you pay notional rent as income? Then the GST department comes and says, okay, have you got CC? Please, if I kindly reverse the ITC. So I have a different take on that. My question would be that whether mere issue of CC by itself can be called as an exempt supply. There is no supply at all by issue of CC. CC is an event. So if a CC is issued and the project is completed, that per se does not trigger an exempt supply. Even though you have rules, I know that there are rules in the CGS rules which talks about unsold area and things like that and total project and all that, but I'm giving a legal perspective. The legal perspective is that, can you say that there should be a proportionate reversal of ITC merely because of the fact that CC has been obtained, or it should be more appropriate to say that I should reverse ITC when there is a sale of such completed unit, in which case there is a consideration flowing in. That consideration can be identified for a sale of immovable property, and therefore proportionate ITC can be looked at. That's one view. And the GST structure is quite complex for real estate. Anybody who have read 3/2019 and annexures would watch for it. And it is quite a tough game as far as this business is concerned. Now, let me go to the implementation part. It's very easy to talk about legislation. We have to see in terms of how it has been implemented. 31 states and union territories have notified rules under RERA. 30 states have set up a RERA authority. Out of them, regular is 24 and interim is 6. 24 states have actually set up a real estate appellate tribunal. In fact, this is much faster. 1st May 2017 legislation came, and we have 24 states who have really set up the real estate appellate tribunal, contrasted with GST. GST came from 1st July 2017. We're still struggling in terms of whether there is going to be a tribunal, and thanks to the decision of the Madras High Court, which had passed the orders in the Revenue Bar Association matter, that may have to be changed the legislation also in terms of how the tribal membership has to be constituted. Regulatory authorities of 25 states have operationalized their websites under the provisions of RERA. Assam, Lakshadweep, Manipur, and Pondicherry are under a process to operationalize. 52,000 real estate projects and 40,000 real estate agents have registered. One more point I forgot to mention, even real estate agents are covered under RERA. So a person who wants to act as a broker, if you remember, some of the real estate brokers used to come in Visu's film those days. Just anybody could become an insurance agent or a real estate broker. That is no longer possible. If you want to be a real estate agent, you must also be registered under RERA, and there are some accreditation which is required. And look at the number of complaints. 47,795 complaints have been disposed of by the authorities across the country. So let me look at some of the orders passed by RERA. So that will give you a flavor of how it is acted. Some interesting judgments. Rajasthan RERA says, RERA prevails over Companies Act. Even if winding up order has been passed, it does not preclude complaints under RERA. It's difficult whether this judgment will sustain. It will be tested because a winding up is as good as a death. We have this perennial dispute in tax matters. If an individual dies, how do you serve the notice? Can there be a notice on a deceased person? Obviously, matters will go to court, and court will pass orders saying that you cannot serve on a deceased person. Then you have situations where a company gets amalgamated with another company. And when a company gets amalgamated with another company, there is a dissolution without winding up. In such a scenario, what happens to the tax assessments and notices for the amalgamating company? There are a lot of judgments in income tax, SPICE, and many other judgments are there that notice to the amalgamating company is incorrect because amalgamating company is no longer in existence. So that be the situation. Can you say that if a company is wound up, you can still make complaints before the RERA? Then comes the Maharashtra RERA. Even if the agreement is titled as a lease agreement, if the time period is exceptionally long, mere nomenclature cannot deprive the rights of the buyer under RERA. This again is a very interesting interpretation. Can mere number of years of lease convert a transaction of a lease into a sale? Now, some of you, Swaminathan is there and others are there who are practice significant income tax. You know that much before there was a concept called as Chapter 20C of the Income Tax Act. Under Chapter 20C of the Income Tax Act, if I want to sell a property, let us say that there was a threshold limit, 25 lakhs, assuming. So if I decide to sell a property and I put the consideration as 50 lakhs in the document, and I cannot simply register the document, I have to go to the Chapter 20C approved authority. Those days it was in Mumbai. You have to go to the 20C office, authority, approved authority, and knock their doors with their application, produce your agreement, etc. The authority will examine, and if the authority is satisfied that the 50 lakhs that is shown as apparent consideration is the real market value of the transaction, they will give you NOC, no objection certificate. Only after getting NOC or no objection certificate, you can sell that property in favor of another person. But if the appropriate authority was the view that you have put 50 lakhs in the agreement, but the real value of the property is actually 1 crore, then the appropriate authority, instead of giving NOC, will acquire the property from you at 50 lakhs. And the income tax department will become the owner of that property, and they will subsequently will have a board saying property under ownership of income tax department under Chapter 27. Big board will be there. The property will remain unused for a long period of time, and finally they will sell it depending upon the market that is available. And sometimes the same buyer will come to buy the property in an auction also. Those tamasha also happens. But the point that I want to make was Chapter 20C had an elaborate set of provisions in the Income Tax Act, and transfer was defined under Chapter 20C. And transfer definition under Chapter 20C in terms of Section 269U, thanks to Swaminathan, also covered a lease beyond a period of 12 years. So only if the legislation chooses to expand the scope of transfer to cover a lease beyond a particular period, it would fall within the ambit of transfer as far as tax laws are concerned. So merely because an agreement is titled as a lease agreement, if the period is exceptionally long, mere nomenclature cannot deprive the rights of buyer is a very interesting view of the Maharashtra RERA. Haryana has got about 1,800 complaints. UP has a backlog of about 8,100 complaints, of which 2,000 has been disposed of. But there is also a fallout. The fallout is that The moment you know that you can complain to somebody, all kinds of nonsense also happens. So there are a lot of frivolous complaints on the increase, and this would affect the functioning of an authority also. Genuine complaints will take a backseat because of backlog. So, and typically in case of delay, what happens, there is a typical order saying that what is the interest element? Okay, what is your future dues? What are your future amounts which are due? You need not pay that, or will adjust interest against the future dues. Something like that, they'll make some kind of order. So how do you go about complaining? You complain to a RERA authority. If the complaint is maintainable, then there is a direction given to approach the adjudicating authority, and he gives a hearing and then passes an order. If you are not happy with the order, either you or the developer, you will go and appeal to the RERA tribunal. And in my experience, it has been functioning extremely well, especially Tamil Nadu. Phenomenal relief has been obtained from the RERA tribunal. They've looked at every case in a very fair and equitable manner, and looked at, and I would say that RERA really served its purpose in terms of how the tribunal operates and how the RERA authority operates, because they look at the issue, look at where things have gone wrong, and tried the level best to even settle try to see if things can be even sorted off. One grievance, if I have to have, is that from if I have to take the side of developers and builders, is that RERA has become only one additional window. It is not a single window. So if I'm going to give so much of data with RERA and get file the website and file a lot of returns and completely comply with the data and maintain my due date and comply with all my due date, does it solve my other problems? No. I still have to go to every other authority for approval. Right from planning stage, I have to go to different doors, knock different windows, and get different approvals. And depending on the height of the project, I may even have to go to DGCA to get a clearance to ensure that the Civil Aviation Ministry also clears it. And after if the project is almost complete, I have to go to the traffic commissioner to get clearance to say that this is also okay. And then suddenly I have a question from the environment saying that did you apply for environment clearance? You can't apply post facto, you must apply pre. All kinds of approvals, significant number of approvals. So number of approvals is clearly an indication that this business requires a significant reform, and which requires both center and state walking the rope together. It is not possible only for the parliament to create a law like this. Most of the subjects are in the state domain as far as approvals are concerned. So only if they jointly do it, it works. So what are the COVID-related reliefs as far as RERA is concerned? Ministry of Housing gave a memorandum saying that through all the RERA authorities, treat COVID as a force majeure under RERA. So what happens in RERA is that you would have given a commitment. You would have given a commitment saying by 31/3/2020, I'll complete this project. Now you would not be able to complete the project because first of all, you can't go to the site. Even if you go to the site, you can't get the materials. Materials cannot move. Even if you get the materials, you can't get the labor. Most of the labor have gone back to various states. It's difficult to get them back. So you will have various other challenges in ensuring that you can complete the project by the committed date. And therefore, they're very clear. They're extending registration and completion date sumo. Luckily, they did sumo, so waiting for an application by 6 months for all projects which are expiring on or after 25th March 2020 without necessity for any individual application. And this can be extended by another period of 3 months. We're also talking about fresh registration certificates with revised timelines, and they extend timelines for all other compliance under RERA. So this is, for example, take the RERA of Maharashtra, Gujarat, UP, and Tamil Nadu. They've already issued orders for extension of completion dates by 3 to 5 months. So this is as far as the RERA element is concerned. And there are interesting orders also passed by RERA. For example, in a situation where the developer was not in a position to develop the project, and he kind of abandoned, saying that I have serious financial crisis, I'm not able to proceed further. And this was a joint development agreement, and there was a landowner and hundreds of customers. So hundreds of customers could not get the delivery, could not get any progress in the project because developer was in trouble. And the promoter, the landowner also could not get the flats which was assured to him. But the landowner also had some construction experience. So when all three approached the RERA tribunal, orders were passed permitting the owner to become a developer to complete the project. So through fresh agreements, the owner stepped into the shoes of the developer and he completed the and started constructing and tried to complete the project. So that way he gets his apartments, he also gets his customers. So it is the overall objective of RERA has been to ensure that the problem is arrested or some solution is given so that the customer gets back his apartment or customer gets back his money. Now I move to the next segment of my topic, which is the IBC. I'm talking only about real estate, not talking generally about IBC. The journey was very interesting. IBC came in 2016, the code, and the code was amended in 2018, whereby home buyers were brought within the ambit of financial creditors. Now just imagine this. There are two kinds of creditors which will operate in IBC. One is a financial creditor, one is an operational creditor. A typical financial creditor is a bank. They have lent money to the project, therefore they qualify as a financial creditor. An operational creditor is anybody, somebody who has supplied, let us say, cement, or somebody who has supplied steel. He will be an operational creditor. So typically a customer, what was his role? Whether a customer is an operational creditor or a customer is a financial creditor. Now, customer has paid 50 lakhs of rupees to the developer and he has not got the apartment. He wants his money back. So typically one would perceive the customer as an operational creditor. But in 2018, the law was amended saying home buyer would become a financial creditor. And based on this, a number of cases were filed against real estate developers by home buyers. And the developers argued saying that it is incorrect to treat home buyer as an operational creditor, as a financial creditor. They must be only an operational creditor. But the NCLT did not agree, and various cases, the resolution process was initiated. This year, the insolvency professional was also appointed against a few large developers. So what did the developers do? They decided to file a writ petition. So matter went to the Supreme Court, where they challenged the constitutional validity of the amendment itself, saying that this amendment to say that home buyers are financial creditors is wrong. Supreme Court upheld the amendment and confirmed that the home buyers are financial creditors. So that being the case, it became even more of opening of Pandora's box, whereby every home buyer had the right to move in. And then it became such an issue that the government had to step in and bring an amendment called as IBC Second Amendment Bill, whereby they tried to restrain the scope of home buyers walking into the NCLT in terms of complaint. But the next set of few slides will be in-depth analysis of the Supreme Court judgment, which is known as Pioneer Urban Land Infrastructure Limited versus Union of India. Now, what were the challenges? In fact, a very good read. If you have time, you should go through the judgment. One of the arguments was RERA prevails over IBC because RERA is a special enactment. If you remember, we used to take up this time. This is also a dispute in our own tax matters, where at some point of time there was a levy of export duty, and export duty was being levied on certain items. And one of the contentious issue was what happens in a transaction where you supply to an SEZ, and under the SEZ Act, if the transaction is an export, would that mean that it will also attract export duty? So that went to Madras High Court and finally upheld by followed by another high courts. Also, Madras High Court said no. The Madras High Court contrasted the Special Economic Zones Act and the Customs Act, and then explained the concepts of special legislation under different fields. And they said that both operate in different fields, and therefore you cannot say that this would prevail over the other. So here one of the arguments was RERA prevails over IBC as it is a special enactment. Second, Article 14 stands violated because there is a classification of home buyers as financial creditors compared to so many other parties in the chain. And one of the arguments raised was manifest arbitrariness. In fact, if you go to that triple talaq case, that's again a very big judgment. Youngsters, it is recommended that you read it. It requires tremendous amount of time to read it. It's a very long judgment. But if you read triple talaq judgment, you will find one particular paragraph where for the first time the Supreme Court says that manifest arbitrariness can also be a ground for a challenge in terms of Article 14. So one of the arguments raised was this is manifestly arbitrary, as home buyers are more suited to be classified as operational creditors. And then another argument was what is the scope of the amendment, namely 5(8)(f) of the code. It was important, therefore, to clarify that home buyers are treated as financial creditors so that they can trigger the code and have their rightful place in the committee of creditors. The whole thing works like this. If somebody is able to trigger the code and the NCLT is convinced that there is a default and default had occurred and it requires action in terms of the IBC, and the process is initiated through the IBC, then an IP's insolvency professional is appointed, whereby he takes over the company, he takes over the business and runs the business. He marshals a list of creditors. Everybody has to go to the insolvency professional and make a list of their claims. And in the sequence of creditors, it always, you have to see who takes priority. The financial creditors obviously will take priority. Workmen will come in a flow. There is something called as a waterfall mechanism, which will indicate who gets what. So the operational creditors will be very much down in the scale, in the chain. So the Supreme Court said it is important to clarify that home buyers are treated as financial creditors so that they can trigger the code and have their rightful place in the committee of creditors. A committee of creditors is appointed whereby they will decide on how the money has to be distributed, whatever is available. So Supreme Court also went on to say that it is difficult to accept the argument that RERA is a special enactment which deals with the real estate development project and must therefore be given precedence over the code, which is only a general enactment. Now here they make a very interesting observation. Supreme Court said the amendment to the IBC came in 2018. When the Parliament chose to amend the IBC through an explanation insert in 2018, they were very much aware that RERA as an act was in existence. They was very much aware that RERA has been passed in 2016 and come into force in May 2017. And despite that Parliament being aware of RERA being in existence, they chose to declare a home buyer as a financial creditor. So that they said is a very important facet. And therefore they said the fact that RERA is an addition to and not in derogation of other laws makes it clear that remedies under RERA to allottees were intended to be additional and not exclusive remedies. And therefore, by a process of harmonious construction, RERA and code must coexist. And the event of a clash, RERA must give way to the code. From a tax perspective, I'm immediately recalling the judgment of His Lordship Justice Markandeya Kanchu in the ISPAT case in the context of customs, where a question arose as to whether a section or rule would prevail. And the question typically, all of us will immediately say section will prevail over the rule. But His Lordship also said the same. But he interestingly went into a different theory. He said that instead of going into Black's law, instead of going into Black's dictionary, he applied certain old Hindu law principles and Vedic principles. And he applied some of those concepts. In fact, there is one concept which is referred to the Ispat judgment. Typically in those days, of course, let's understand that this is period and this is history, and therefore I'm not endorsing whatever that happened at that point of time. So there was this animal sacrifice that was there. And in the mythology, there was a reference in the scriptures to say that the animal must be sacrificed. Until it is sacrificed, it must be tied to a particular stick. And the stick specifications are also given. And apparently, the next set of provisions, or we call it provisions, was that in case the stick was not available, any other alternate stick can be used, because the main object was the sacrifice and not the stick. So he applied that philosophy and said that the rule has to give way to the section. The generality has to give way to a specific, and that's how the specific objective prevailed over the general objective in the context of section 14 and rule 9 of the customs valuation rules in the famous Ispat judgment, which is again a good read. So here the Supreme Court said, by the process of harmonious construction, RERA and code must be held to coexist. And in the event of a clash, RERA must give way to the code. And they said RERA cannot be held to be a special statute. And in the case of a conflict, it would be the code that would prevail. But then the Supreme Court also said, look, there are consequences. There are different remedies, and therefore the consequence can be very different in the code. Code is meant to be a proceeding in rem, which after being triggered goes completely outside the control of the person who triggers it. You go and complain before NCLT, you trigger the IBC, end of story. You are no longer in the picture. The NCLT takes over, passes an order, the IP takes over, and then there is a committee of creditors. Depending on your profile, you may come in, you may not come in. So the person who prefers an application to section 7 of the code takes the risk of his apartment not being completed in the near future, and in the event of there being a breach on the part of the developer. So Supreme Court gave adequate warnings, even though they said IBC would prevail over RERA. If a petition is admitted under the code, the allottee may never get refund of the entire principal, forget the interest on account of the elaborate insolvency resolution process. On the other hand, if the allottee were to approach the RERA, it is more likely that the project will be completed early, or at least he will get back his money with interest and compensation. And then Supreme Court virtually gave an advisory by saying that only an allottee who has completely lost faith in the management of the real estate developer would come before NCLT. When a person, now this is a very important point, because many people rush to NCLT because IBC has opened up the gates for the home buyer, and the home buyer can become a financial creditor, and he can open up, he can trigger the IBC. So you need, as a professional advisor, you need to be very careful that if you advise your client to go and trigger the IBC through the NCLT, there is a risk that your customer might lose, in the sense that along with them there will be so many other players, you may not get the relief at all. But if you probably look at other alternative avenues and knock those doors, you may probably get some kind of relief. When a person supplies goods and services, such a person is a creditor, and the person who has to pay for the goods or services is the debtor. In the case of a real estate developer, developer who's a supplier of the apartment is the debtor, in as much the home buyer funds his own apartment by paying amounts in advance. Now comes interesting aspects of this judgment. Why did the Supreme Court agree that a home buyer can be a financial creditor? Now they give the justification by saying, in a real estate project, money raised from the allottee is being raised as consideration for time value of money. The fact that the allottee makes such payment in installments which are coterminous with phase of completion of the project does not in any way less make such payments as payments involving exchange. And therefore they said home buyers can be assimilated with other individual creditors like debenture holders, fixed deposit holders who advanced certain amounts to a corporate debtor. In effect, this judgment of the Supreme Court virtually says that a real estate developer is a person who is borrowing money, and the customer or the allottee to whom the apartment is going to be allotted is a person who is a lender of money. So the buyer is no longer a buyer, has become a money lender as far as this decision is concerned. And then the next part of the decision, the amendment came through an explanation. This explanation was added in 2018, and therefore Supreme Court said the explanation only clarifies doubts that had arisen, and therefore it is retrospective from the date of inception. Now this is my view, with due respect to the decision of the Supreme Court, without going to any other aspect of the Supreme Court judgment. When I went through the Supreme Court judgment, I didn't see any of the arguments which probably could have been raised. Probably the decision could have still been the same after those arguments. You never know. But one possible contention which I could not see in the judgment was, what is the nature of relationship between a developer and a customer? The developer has always been perceived as a service provider. Developer has been identified as a contractor. Customer is identified as a service receiver. Customer is a contractee. The contractee awaits services in the form of construction. In case there is a failure, it is identified as deficiency in service or breach of contract. Amounts paid by customer or contractee is payment for the services to be provided and not money is lent. And there was a levy of service tax. There was a levy of VAT. And now GST is also levied on the ground that there is a works contract service. Now, if it is a consideration for a service to be provided, can it still be called as a loan advanced by a customer? Now, if this judgment is taken to its logical conclusion, and you read the provisions of the amendment which says that the home buyer is a financial creditor, which has now been blessed by the Supreme Court. If home buyer is now identified as a financial creditor, what happens to other impacts? In fact, this decision of the Supreme Court, Larsen and Toubro, was not cited before the Supreme Court. Because largely, when those of you remember the old story of Raheja and finally Larsen and Toubro Supreme Court, largely when Supreme Court held that when the agreement between the promoter and developer and the flat purchaser is to construct a flat and eventually sell the flat at the fraction of land, it is obvious that such transaction involves activity of construction, in as much as it is only when the flat is constructed can be conveyed. We therefore find no reason as to why such activity is not a works contract. Now, if it is a works contract, ideally there should have been an operation creditor and not a financial creditor. Now, let me take an interesting question, a new perspective. Supreme Court said Parliament was aware that RERA was in existence. Despite that, they brought the amendment to IBC and said that home buyer is a financial creditor. When they made the amendment in 2018, making the home buyer a financial creditor, Parliament was equally aware of GST. GST came to the statute books from 1/7/2017, plus the constitutional amendment was very, very clear in 2016 itself. GST considers construction of complex as a service. GST considers works contract as a service. Home buyer is identified as a recipient of service. As per Supreme Court decision in Pioneer, home buyer is a financial creditor advancing money to the developer. Now, if the money paid, if I am buying an apartment, I am paying money, and thanks to this decision and the provisions of IBC, I am nothing but a lender. I am a money lender. And what I have given to the developer is a loan. Then can you say it is still a consideration for the purpose of GST? Now, by applying the same rationale, if Parliament knew that GST was in existence, and Parliament knew that GST law treated this as a service liable to GST, not as a lending transaction, but Parliament chose to, despite this existence of this, create the special provision in IBC, whereby they said that a buyer is now a financial creditor, a buyer is a lender. can there be a levy of GST on construction services? Can there be a levy of GST on works contract? It's a big question, big debate. Who knows? Sometimes it may be taken up, but somebody and might go to court. So this just to complete the picture. What is this explanation? The explanation for the purpose of the Amendment Act: any amount raised from an allotee under real estate project shall be deemed to be an amount having the commercial effect of a borrowing. And Supreme Court said this explanation is retrospective, it is only clarificatory. So larger question flowing from that, can you say the explanation of the nature of clarification? Those of you in service tax would remember the Martin Lottery judgment in the context of Finance Act 1994, where the Supreme Court said that if a substantive law is deduced by reason of an explanation, then it will not have a retrospective effect. Then there is another interesting judgment of the Supreme Court, Thermal Chemicals. Substantive law refers to a body of rules that creates, defines, and regulates rights and liabilities. Right conferred on a party to prefer an appeal against an order is a substantive right conferred by a statute, which remains unaffected by subsequent changes in law, unless modified expressly or by necessary implication. Procedural law establishes a mechanism for determining those rights and liabilities and a machinery for enforcing them. Right of appeal being a substantive right always acts prospectively. It is strike law that every statute is prospective unless it is expressly or necessary implication made to have a retrospective application. This was the view of the Supreme Court in Thermal Chemicals, and this decision was followed by the 5-member judgment of the Supreme Court in the Viraya case. And Thermal Chemicals also applied in BK Revision Services. You can go into these citations to see certain interesting aspects of those decisions. So typically, Supreme Court has cleared the path for home buyer to initiate insolvency against the defaulting developer, but Supreme Court also gave a warning as to what are the consequences. Now, when everything got opened up and any buyer could knock the doors of the NCLT, you have this interesting decision of the NCLT in the case of Nandik Share Harikishan, where the NCLT actually found out on facts that the intention of the petitioner is only to extract more compensation. Even though flat is ready for possession, the petitioner is adamant on taking refund. The petitioner seems to have some other interest other than the flat. So they said, we are not getting into that aspect. But they also observed in a project like this where hundreds of flat buyers are involved, when compensation of this amount, the segment is claimed or demanded or exceeded, we are afraid that may lead to utter chaos in the real estate market in the country and will affect the real estate sector in a situation where no investor will be willing to invest in the real estate sector. This is a very powerful and significant observation made by the NCLT Mumbai. And they also said that we are of the view that petitioners of this nature have to be dealt with in a macroeconomic perspective. Otherwise, it will scupper the prospects of real estate sector. So they actually dismissed the petition and said that you can go and approach any other authority. So despite the home buyer being identified as an operational creditor, financial creditor, despite the Ibc Amendment being upheld by the Supreme Court, the tribunal went through judgment of the Supreme Court and said that we have the decision-making process to admit or not admit a petition. We feel that this is a vindictive action and therefore we dismiss the petition. So this was a forerunner for the thought process from developers saying that we don't want the entire project to be blackmailed by one fellow making an application. Therefore, next amendment came. Ibc Amendment 2020 with effect from 28/12/2019. A proviso has been inserted to section 1 before the explanation. Now a new threshold for a financial creditor has been created. So you are a set of home buyers, you want to be called as financial creditors, you can't come single anyway. So application by not less than 100 of such allottees under the same real estate project, or not less than 10% of the total number of such allottees under the same real estate project, whichever is less. So they kind of give a situation where it's like a class action. So you have more people affected, then it is much more better for you to knock the doors, much more easier for you to knock the doors of the NCLT through the Ibc than before. Of course, this amendment has also been challenged before Supreme Court, and the Supreme Court has stayed the operation of the amendment. So matter is status quo as far as the amendment is concerned. But the amendment also raises new question. What is the meaning of same real estate project? What happens if it's phase 1, phase 2? How do you determine it? RERA has got at least an identification of each project being different. Ibc does not have that identification. Can you apply RERA definition to a non-RERA project? There could be a project which does not even have involved RERA. Can you apply RERA definition? Each phase is treated differently under RERA. Assuming a home buyer succeeds in RERA, let us imagine a situation like this. A home buyer does not get the money. He goes to RERA, knocks the doors of RERA. RERA passes an order and says, yes, compensation is payable. Now the compensation payable is not paid. Therefore, he becomes a decree holder. Now, should he go to RERA and seek execution under RERA, or can he move to NCLP as a decree holder? In NCLP, he does not fall within financial creditor or operational creditor directly, but under the underlying transaction, he could be seen as a financial creditor. If so, what will be the thresholds? Should he bring 100 people also who got decrees like that, or he can say that I don't fall in that threshold, I can go. So, massive area in terms of interpretation is available as far as this is concerned. Another logical question, is landowner an allotee? Now, under RERA law, landowner is seen as a promoter. Landowner is also considered as a consumer under the Consumer Protection Act by the Supreme Court in the case of Fakir Chand Gulati. Many of you will be aware of the Fakir Chand Gulati judgment, where the question that arose was, there was a joint development agreement, there was a landowner, there was a developer. The developer defaulted in terms of compliance or in terms of completion of the project. The landowner filed a consumer complaint under the erstwhile Consumer Protection Act, the old Consumer Protection Act. The developer raised 3 questions. He said that first of all, a landowner is not a consumer. Second, he said, I'm not providing services. Third, he said there is no consideration. All 3 issues were adequately addressed by the Supreme Court in the famous case known as Fakir Chand Gulati. Supreme Court said the very fact that, in fact, one of the arguments was we are joint venture partners. And that was also rejected by the Supreme Court by following the new horizon judgment, by saying that what kind of rights are you giving to the owner? You can't even enter the premises. You can't even have access to your plans. You can't have any control over your project making, decision making. Therefore, this is not a joint venture. This is clearly a contract of provision of service and a receipt of service. Therefore, they said that the landowner is a consumer. And then they said the construction that you have agreed to provide to the owner is a service that you are providing. Then the question of consideration came. Then the Supreme Court said that the land which is given up by the owner is the consideration for the constructed area to be given by the developer. Now, this is a very interesting aspect which you can use for GST purposes. When we look at construction for the owners, we always break our head as to how to value construction for owners. Are we bound by the comparative market value? If you look at the Fakir Chand judgment, you get an idea whereby the Supreme Court says there is a consideration in the transaction. Let us imagine a situation. I own the land. I enter into a development agreement with the joint, get into a JDA with the developer. And in terms of the agreement, 100 apartments are going to be built. Out of the 100 apartments, I am getting 60. The developer can sell 40 in the market. So an interesting view can be, I am giving up the undivided share or the imprint of land over the 40 apartments which is now allocated to the developer. And I'm doing so because he is constructing 60 apartments for me. So the value of the 60 apartments can be equivalent to the guideline value of the land given up by me, in which case consideration is ascertainable. If consideration is ascertainable, why should I look at comparative methodologies or look at rules for valuation? This is one other thought which I thought I'll just spark. Wherever it is impossible not to bring tax into a non-tax topic. So pardon me for that. I will try to give that. So a landowner, is he an allotee, is one of the interesting questions that has come up. Now coming to the COVID aspect of COVID-related relief of IBC. First of all, the default was originally threshold was 1 lakh. Now they've raised it to 1 crore. Unless the amount is going to cross the 1 crore limit, you can't even knock the doors of NCLT. Then there is a special insolvency resolution for MSMEs. Then suspension of fresh initiation of insolvency business up to 1 year, depending upon the pandemic. The most interesting point is that COVID-related debt to be excluded from the definition of default and report for purpose of triggering insolvency proceedings. All this was originally announced through a PPT, but now converted to the amendment itself. Now the effect of the amendment is that during this cutoff period, if a default had occurred, perpetually cannot complain as far as IBC is concerned. RERA versus IBC. In number of cases, RERA has taken on record the complaints filed with the home buyer, has given relief, complete the project by a cutoff date, or given direction to refund the money, given compensation. They even said another developer is willing to take over, let him take over the project and complete it, or they even allowed the landowner to take over the project and complete it. But in IBC, if the claim is to be made as a financial creditor and the resolution process commences, it is the possibility of refund is very, very difficult, and the handover of complete apartment is almost remote unless another developer comes in. If somebody is going to come in to clear the debts of the developer, he may look at the land. But if you look, you have to get some other developer who can complete your project and give you that apartment. So that is why RERA can give you much more relief compared to IBC. Plus the new thresholds will effectively eliminate individual complaints. Now let's look at IBC versus consumer protection. Some of the youngsters should know that there is a new Consumer Protection Act, Consumer Protection Act 2019. It's much more wider than the old Consumer Protection Act. There was also this controversy as to whether doctors are covered under the new Consumer Protection Act. In the bill stage, the doctors were specifically mentioned, but in the act stage, it was removed. But even in the old law, they were not specifically covered, but there have been action under the Consumer Protection Law against doctors. There are some decisions, including decisions of the Supreme Court, including issues with reference to data privacy, etc. So, Consumer Protection Act has received the assent of the President, but the act is yet to be notified. And 242 defines service, which also includes housing construction. And there's clearly a definition of deficiency. It's almost in line with the old one. Let's look at IBC versus arbitration. Suppose your construction agreement has got a clause saying that if there are disputes within the parties, then the parties will have to resort to arbitration. The Supreme Court said that insolvency and winding up matters are non-arbitrable matters. Therefore, it goes out of the entire box of arbitration in the case of Booz Allen. Now, assuming a home buyer has also defaulted, developer has the choice of using it as a defense. So sometimes when the consumer complains that the developer has faulted and therefore he wants to take action against him, developer may also have his bag of woes. He may also say that this fellow doesn't respond to email, this fellow doesn't correspond. If June installment is due, he pays in next June. He's always writing spiteful letters. He doesn't pay me money properly. So that Supreme Court said can be choice as a defense. Now section 7 deals with the financial creditor, 8 with the operational creditor. 8 specifically refers to arbitration, but there is no reference to section 7. So there are very interesting debates going around in the field as to what is the impact of arbitration clause as far as IBC is concerned. Let's look at IBC versus tax exemption. Now you are an individual or a HUF. You have sold a property. You have sold a property for, let us say, 2 crores and your capital gains has arisen. Now under the Income Tax Act, you know that there are certain avenues whereby you can reinvest. And by reinvesting, you will save your tax in terms of capital gains. Apart from bonds, you also have the advantage of buying a house or constructing a house. So section 54 of the Income Tax Act deals with that. It says you can either purchase a house 1 year before or 2 years after the date of transfer, or you can construct within a period of 3 years after the date of transfer. Now, there is a special mechanism for it. There is a capital gains account scheme. You have to put the money in the capital gains account scheme, and then you have to file a return saying that I'm claiming section 54 exemption. You have to say that I've put this money in the account scheme, and then slowly you should use the money for construction and demonstrate before the assessing authority that you have done all that is required in terms of section 54. Now, what happens if the construction is delayed for an assessee on account of project getting stuck on account of IBC? He is under no fault. Developer has got into some other problem, and because of some other complaint being filed, the entire project is stuck. The IP has taken over, and business is not happening. Now, there are interesting judgments. There is one judgment of in the case of PCIT versus G. Gopalasamy. Assessee has done what all it could do for acquiring the villa by paying the whole price as on July 28, 2007. There is no case for the revenue that construction itself was not started. Only grievance of the revenue is that unit members have changed and the outer limit for completing construction went beyond 3 years. Assessee is still entitled to exemption 384/307. And of course, without judgment, you can also argue the impossibilia principle, lex non cogit ad impossibilia. Law cannot compel a man to do what he cannot perform. This is beyond my control. I can't do anything about it. If you remember in customs, there's a judgment of the Supreme Court in the case of Talao, India. In Talao, India, in the earlier period, there was under section 25 of the Customs Act, you have an exemption notification. And one of the exemption notifications, it can be either subject to some clearance from somebody. So one of the notifications said that you must get a clearance from a hydrocarbon committee of the government of India. And the assessee had taken all efforts, filed all papers, all annexures, etc. required for the NOC from the hydrocarbon committee, but that didn't happen in time. By the time the goods had come. So when he cleared the goods, he did not have the benefit of the hydrocarbon certificate, which would have helped him to get the benefit of the exemption. But subsequently it came. And therefore the argument put forth was, I cannot be faulted because I've done what all that is required to get that certificate. And the certificate came late. Supreme Court agreed and gave relief as far as the duty is concerned. Then impossibilia doctrine has also been applied by the Delhi High Court in the context of VAT, where they said that you cannot expect a supplier to go and you cannot expect a buyer to go on and find whether the seller has paid the tax to the government. So you can always look at this particular argument. Interestingly, there is another IT judgment where assessee was called upon to prove whether he had done completion certificate, construction has been completed by 3 years or not. So what is the proof? Thus he produced a Gurupradesam certificate, a Gurupradesam invitation before the court and said that, look, I've printed Gurupradesam invitation. The tribunal accepted and said that the very fact that somebody has gone on and printed a Gurupradesam invitation indicates that the project is complete. Now there is also this COVID ordinance, which 2020, which has extended all the due dates falling between that cutoff date, 24th March to 30th June or whatever date as may be extended. Next is a very interesting topic, IBC versus stamp duty. Or RERA versus stamp duty, both can be looked into picture. Sale deed for UDS and construction agreement is registered. So you are bound to register your construction agreement because you collect more than 10% advance. You have registered the construction agreement. Sale deed is also registered. And then project is stopped halfway and the buyers initiate IBC. Now, what happens to the transactions registered? There is no provision in the Transfer of Property Act or in the Registration Act which covers a cancellation of a deed of sale. That is why a deed of sale is supreme. It's a conveyance. It absolutely conveys. That's why it's called an absolute sale. A vendor cannot execute cancellation deed unilaterally, was the view of the Supreme Court in Tota Gangalashmi. An instrument cancelling a conveyance will not revest the estate in the vendor. It has to be done only through a reconveyance. But a brilliant judge of the Madras High Court is in the case of Latif Estate. Justice Sivanyanam has passed that order. Once title to the property is vested in the transferee by the sale of the property, it cannot be divested onto the transferor by execution and registration of a deed of cancellation, even with the consent of the properties. The proper course would only be to reconvey the property by a deed of conveyance by the transferee in favor of the transferor. Where a transfer is effected by way of sale and the condition that title will pass on payment of consideration and such intention is clear from the recital in the document, then such instrument or sale can be cancelled by a deed of cancellation. That is the most critical point. If your sale is subject to a condition that the title to the property will pass only on payment of consideration, then it is possible for you to cancel it with consent of both parties. But if consideration has fully flown and there is no such clause, view of the Madras High Court is that only possibility is that buyer should reconvey. If buyer does not reconvey, you are in big trouble. So I will bring a Dasavadaram picture into this. Now the home buyer has got multiple avatars. He is a customer for the builder. He is a consumer under the Consumer Protection Act. He is a borrower for the bank. He is a claimant under the Arbitration Conciliation Act. He is a financial creditor under IBC. He is a service receiver under GST. He is an allottee under RERA. He is a purchase under the Stamp and Registration Act. He is an apartment owner under the Apartment Ownership Act. He is also a depositor under the capital gains scheme. So this is the effect of the amendment I've already talked about. So last few slides quickly touch upon COVID and I will close the session. I think I'm touching for last few minutes. Everybody is affected, obviously. Global impact is there. Even all professions have been affected. We all know what kind of impact it is on profession itself. Why talk about businesses? Investment decisions will be definitely deferred. And if I look at assets in play, I don't see real estate at the top. Real estate is now in the bottom. This will be the sequence of investment play over the next few years. Therefore, the appetite for real estate will be very, very low. So let's look at residential. You'll have delay in completion of project because money may not be there. Customers may not see value or priority. There could be a lot of customers walking out of transactions. Customers may not pay on time because their salaries may not come on time or they're already lost their jobs or the pay cuts. They can't afford to pay the EMI. Mega new projects are unlikely and therefore there'll be a new focus on liquidating inventory. But there is a very good lecture of HDFC Bank, HDFC chairman, ex-HDFC Bank chairman, where he talked about how real estate had to rethink. And one of the points he made was look at how you can reduce your profits as much as you can, liquidate inventory. Commercial, very interesting developments are likely to happen. Just imagine a situation like this. Why would a company have 12 floors in OMR, all air conditioned, and have 200 buses having employees ferried to that location and provide them food and all kinds of things and face GST issues on canteen and other aspects and face other impact in terms of cost and take care of these employees, so many other facets of maintaining maintaining the buildings, and they may not need that many floors. They may even surrender 10 floors because the employees are going to work from home. You don't have to bring them to their location. Therefore, bus cost is saved, transportation cost is saved, food cost is saved. Productivity increases because this guy seems to work better from home. When he wakes up, he opens his laptop and starts working, whereas normally he would travel 3 hours to come to the office. So commercial will have a massive change. So new projects will have a wait and watch game. Work from home impact will be huge, and lot of property are likely to get vacated, and there will be a probable surplus in the market. Contractors are already facing a cash crunch. The laborers may come or may not come back. There will be delay in payments, pause in fresh projects, and of course contractual disputes. But I'm not painting a gloomy picture. I'm looking at, from an optimistic perspective, what are the solutions? Typically, if you're a real estate player or your client is a real estate player, if they're able to crack working capital management effectively, they can manage. They need to understand which is their priority. Tremendous amount of cash flow planning will be very critical. A lot of borrowing is available today, so you should not just mindlessly borrow. You should borrow only if it is critical, because ultimately you have to repay that debt. Examine all channels of credit announced by government and see what is available. Liquidate inventory wherever possible. There will be takers if the price comes down. There could still be buyers who are looking to buy cheap. If you reduce your profit expectation, again, there's also possibility. And a lot of negotiations will always happen. So it is not as if a completely gloomy picture exists. It depends on how you reinvent, how a person is able to convert difficulty into an opportunity. That is an innate skill, and many businesses are known for it, and they thrive and come out of that in much flying colors. In fact, I keep giving the example of just imagine a couple of years back, for some reason this Maggie came in the news, and everybody started getting panicky about Maggie, about a particular possibility of a chemical in that particular product. And there were a lot of action, and the brand lost its value significantly. I still remember when we used to come out of the Chennai airport, on the right-hand side there used to be a Maggie counter, and they quickly removed that counter itself, and everywhere Maggie was taken out of stock. But subsequently, it was completely reinvented, and look at where Maggie is today. And in fact, lockdown, a lot of people buy Maggie as the first choice. Or take Cadbury's, for example. At one point of time, there was this issue of Cadbury's chocolate having some molds in it, and the brand lost its value and sales plummeted. And then they did a brand building, brand rebuilding exercise, and Amitabh Bachchan started eating chocolates on television. And after a point of time, top in the market again. So I don't think that the COVID will completely destroy businesses. Businesses will have a small lull, but they will jump back in vigor and rigor, and they would reach bigger heights than before. Same is the case of any other business or professional, especially for the youngsters on the call. Please don't get disillusioned. Do not think that this is going to be a very long journey. Pardon me for being taking the role of an advisory, but this is my third decade in practice, so I know youngsters are going through a very tough time, and people who have just qualified or people who have just joined 1 or 2 years in office may find it very difficult in terms of their growth potential. I would say invest this time wisely and read as much as you can, learn as much as you can, because this could be a God-given opportunity or a nature-given opportunity, if you so believe, that this will hone your skills and make you ready for a much better future. So with that, I thank you all for a very, very patient hearing. And Prithvi, you can open up the chat box or questions. If you can read out, I'll answer.
Sure, sir. Thank you very much, sir, for this wonderful session and a very lucid presentation, sir. Sir, there are a couple of questions already raised by Gokarnation, sir, in the chat box. I'll read it out to you, sir, and I'll post it also again. I'll read.
Yeah, I got the chat box.
Yes, sir.
So one question by Gokarnation. Hello, Gokarnation. How are you, sir?
He is muted, sir.
Okay, no, fine. Leave.
Yes,
unsold apartments are kept as trading stock to get some revenue if the builder leased out the unsold apartment for residential purpose by entering into lease agreement with the tenant. When the sale offer comes, flats are sold with sale deed of UDS and construction agreement. Lease agreement is terminated. Where did that go? 1 second. Lease agreement is terminated. Then what happens? Now, any provisions RERA for such rental activity of unsold flats. Further, whether the buyer can get any legal remedy through RERA that builder has sold the unused flats. Interesting question. Number one is that when it comes to RERA, there are certain commitments which you give. And one of the commitments is that you are going to complete the project by a cutoff date. and you are supposed to produce a completion certificate also with the RERA and do the necessary filings or seek an extension in case you are not able to achieve it. So you are talking about an apartment which is given on lease. Therefore, it is very clearly a situation where you have completed the project. And it is your misfortune that you completed the project, but there are no takers. 100 apartments stand completed, only 20 buyers have come in, and 80 is yet to be sold out. This does not mean RERA can come into the picture, because RERA is satisfied that they have completed the project. So it is open to the builder to deal with those apartments in whatever way he wants. And since technically he has put his money and belongs to him, he may be entitled to enter into lease agreement also. Subsequently, when the used flats are being sold, now that would be an interesting question. When the used flats are being sold, transparency is also important from a developer's perspective. But if assuming the buyer inspects the flat and he is convinced that everything is fine, the buyer still enters into an agreement with the developer for the conveyance of the property. So the developer would sign UDS sale deed as well as a construction agreement given the latest IG circular. And the construction agreement will probably talk about defect period liability. So there will be a clear clause of defect period liability. And even under RERA, there is a provision for defect period liability and what are the purview of defects and things like that under RERA legislation. Therefore, a customer who has bought the flat subsequently, if you find that he is a victim of something and there is some defect which is probably caused because of usage or something, you can always take action by going to the RERA. Flat sold after CC received as per recent circular, 2 agreements executed. Sale deed for UDS and construction agreement, GST is not paid as a flat is sold after CC. Whether the GST can deny the exemption under construction service and demand GST under works contract, treating the construction as works contract in as much as 2 separate agreements are made with registration, or we can contest that 2 separate registrations to fulfill the obligation under registration department is not binding. I understood the drift of your question. I'm not reading the full question. Let me park this in 2 segments. Number 1, the issue of CC as a factor and issue of CC taking the transaction outside the ambit of GST and putting them into a non-supply scenario through 3rd schedule is done and dusted, which means the legislation is very clear that if a completion certificate is obtained, there ends the matter. There cannot be a levy of GST. Any collection of GST would also be illegal, and government can recover that money if illegally collected as GST. So if GST is not applicable because completion certificate is issued, how you execute the documents is totally irrelevant as far as GST and tax laws are concerned. If I execute 2 documents and those 2 documents are accepted on account of a beneficial circular issued by the IG, paper product judgment, I can always use a beneficial circular in my favor. And the sub-registrar accepts those 2 documents. The very fact that 2 documents are executed cannot change the nature of the transaction as far as what I've adopted for the GST is concerned. Now, coming to your point on works contract, I would ask you to read the judgment of the Supreme Court in Larsen and Toubro in depth. And if you read, there is one particular paragraph where the Supreme Court says, if after construction is done and an agreement is entered into with the buyer, there cannot be a transfer of property and goods in the course of execution of works contract. Which means, even in a works contract scenario, if I have obtained a CC and execute a construction contract, there is no fresh transfer of property in goods from the contractor to the contractee. If you read that particular para in the L&T judgment, and therefore there cannot be a levy of VAT. And the same definition is borrowed as far as WCP 2119 is concerned. So that principle can be extended here also. Oh, Prithvi has asked a question. This should have taken as a first question.
No, sir. I just copied and pasted his question, sir.
Oh, okay.
Yes.
Sir, if builder is borrower, whether there is any provision to register the mortgage with RERA?
Yes,
no,
sir,
there is no such provision to register the mortgage with RERA. But it's an interesting question. Why can't we think on it? But the answer could be probably that when you go for obviously you can't go to RERA to register the mortgage, but if you want to register this document in the sub-registrar office, they would ask a simple question: where is the mortgage in this transaction? You're only quoting an IBC provision to treat as a borrower and lender. They may not accept that construction agreement per se to flow, but who knows? You may probably seek a mandate to accept the document as a mortgage and register, and under Article 226 and let's see what the court does.
Thank you, sir. Sir, I think Aparna ma'am wants to say something. I'll unmute her.
Yes, please.
Yes, ma'am.
You're able to hear me?
Yeah,
Yes,
yeah.
ma'am. Yes, ma'am.
Yeah. Vaidhi, it was a fantastic session, as usual. In fact, you've opened a Pandora's box by, trying to apply the. Just a minute. Yeah. By trying to apply the pioneer judgment in the context of GST, that is really going to open a Pandora's box on TDR. My question is, you were saying that under the IBC code, the property buyer is treated as a financial creditor, isn't it? That's your
Correct.
understanding. Now, what would be the role of the bank? See, the buyer, obviously, some of them, of course, may have lump sum, may have the amount to pay it off. But, they would be taking loans from the bank. What is the role of the bank in this transaction? If
See,
the buyer is the financial creditor.
You're talking about the bank which has lent to the project or bank to the customer?
Yes. Customer.
Bank to the customer. Now, as far as bank to the customer is concerned, it would be a simple case of lending and lending for purchase of a house or an apartment, and it will be a simple loan. If the buyer happens to be a corporate entity in this scenario, then the bank could initiate action against the corporate entity by triggering the IBC. Currently, IBC is not applicable to individuals. That chapter is yet to be notified. Directors can be pulled up for corporate violation, but individual per se is still not under IBC. Therefore, if the buyer is an individual, the bank has to only proceed through the normal channels of recovery, either through DRT or all other normal processes which they do, and or bring the property to auction under their own powers, etc., under the agreement. But they cannot initiate the IBC for that individual customer. But if they've lent to a project, then they step in as a financial creditor for the project straight away.
No, I'm talking about the angle. From the angle of the buyer. Buyer who has, yeah. So in that sense, he will not be made a party, is it? I mean, the bank will not be made a party to the proceedings.
Bank would not be made a party to this.
Okay. Thank you.
Thank you. Sendil Kumar sir has a question. So he's asking if suppose a software professional enters into an agreement and pays 20% on a completed certificate obtained project, but he lost his job, can he get back his money invested? And whether force majeure clause for buyer, how far applicable during COVID-19 period?
See, my view is this. I've gone on record and issued opinions on this aspect. A person who has booked an apartment and a person who has paid a significant amount or 20% as advance towards construction has the liberty to walk out of a transaction. He can always come back and say, I'm cancelling my booking. I don't want to have the apartment. Please give my money back. So the builder or the developer may not be in a position to say that you have signed the agreement, you have to continue to pay the installments and you need to get the property. That may not be a possibility. Builder might have difficulties in saying that, I have problems and therefore I can't complete the project. He may have difficulties. He will not be allowed to say so. But a customer can always walk out of the project. And typically construction agreements have a safety valve that if there is a cancellation, there will be some kind of retention of money by way of forfeiture and the balance will be paid. Most well-drafted construction agreements would have this kind of a clause. And if you're able to cover that clause, it is fine. Now, there are two possible scenarios. One scenario is that the consumer comes to the builder and says, I can't pay you any more money. Give me back my money. The builder says, okay, I'll give you back money, but I've already paid GST on it. You gave me 20%, I've already paid GST to the government. Now the buyer says, I don't know about your GST payment, give me that GST also. And the builder says, how can I get the GST from the government? Because I've already paid, because GST is payable on advances, I paid this money. Now that becomes a legal hurdle to cross over. One is probably through a credit note. A credit note could be issued in the sense that you can cover this money through a credit note. And that GST can be adjusted against subsequent GST liability of the builder. Second possibility is to say that in case credit note is over, period is over, etc., you can always say that we'll cancel the transaction. I can't apply for refund because I've collected the money from you. It is unjust enrichment. You go and apply for refund saying the transaction is cancelled. You can get back. In fact, I would believe that Aparna will probably remember this. There is a concept called as unfructified sale in the sales tax law. In the sales tax law, CST Act 1956, Section 8A of the CST Act deals with the sales return. And the sales return must happen within a 6 months period. If sales return does not happen within a 6 months period, you cannot reduce it from your turnover. Now, there were judgments to say that if the sale itself is not fructified, it is called as an unfructified sale and not a sales return. So I would borrow the concept and say, where there is a cancellation of a transaction, it is an unfructified supply. And therefore, if the supply is an unfructified supply, the buyer should be entitled to say that as per law, tax was not payable, whatever was paid is excess, under 54 PV refund, I am making an application for refund. This is situation 1. Situation 2, customer who wants to cancel comes and says, I found another fellow. He will pay the balance of 80%. You give the apartment to him, but give me the 20% to me. And you collect the 20% from him. Now that is even more interesting third party scenario. There are different consequences for that, which will take another half an hour.
Thank you, sir. Sir, I think we have taken almost all the queries. So we can move on to the conclusion, sir. I request Aparna ma'am just to come in and tell a few words, a few concluding remarks, and then we can close the session.
Yeah.
Aparna ma'am.
Vaidhi, fabulous, excellent session. As usual, thorough preparation. We have lot of questions still, which you will definitely are going to answer probably the second session, because I think IBC a little more elaborate this thing is required, because someone else has also written in the chat box. We require your guidance in that also. So fabulous session, and thanks a lot for addressing. It was a wonderful session, wonderful learning experience for all of us. Thank you very much.
Thank you.
Thank you very much, Aparna ma'am.
Thank you, Prithvi. Thank you, Samran.
Thank you very much.
Thank you, Srinivas.
Thank you, sir. And I thank all the participants for joining us today. Today was our 80th webinar. Over the coming weekend, we have quite a big sessions lined up for tomorrow, day after, as well as on Sunday. So we will get back to you on with the respective link. We will share it and notify you in the group as early as possible. Thank you once again all for joining us. We will be uploading this session in our YouTube channel also.
Thank you.
Sir, there has been request for PPT presentation. I'll message you my mail ID, sir. If you can mail it to me, we will.
I will share it. I will share it with you.
Thank you very much, sir. And I thank all the participants once again. Stay home, stay safe. Thank you.
Thank you.
I'm ending the session.